This is an important discussion that we need to have because when you have a business, you are trying to protect your personal credit. This is important, okay? So in today's conversation, I want to talk about business credit cards with soft pull. How do you get a high limit credit card quickly and easily, no matter what? Welcome back, folks, to another edition of the Awesome Sort of Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous. If you were to ask me, if you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about business credit cards with soft pull. How do you get a high limit quickly and easily, no matter what? It's really important the first step is to identify those business credit cards with soft pull or with easy approval, okay? There are a lot of them out there, but we just want to give you 5 of them here. So those credit cards either do a soft pull or they don't check your credit at all. Or in some cases, they will look at your company's financial statements and performance in general to actually grant you a business credit card. So number one, we have RAMP. RAMP is kind of cool for no credit, no personal guarantee. And RAMP actually is a corporate charge card. In other words, you have to pay everything you charge on the card at the end of the month. And RAMP is also an expense management platform, so you have a unique platform built to help companies build cost, and they do require $75,000 cash on hand, okay? $75,000 to $100,000 cash on hand. Then you have the Chase Inc. Business Preferred Credit Card. This is great if you already have a relationship with Chase. What Chase will do is that they will do a soft pull. They will look at your company. They will look at your card usage. If you use the card responsibly, this is good. They will look at your financial statements. If you actually go to a branch and speak to a loan rep or somebody in the credit card department, and what will happen is that they will do a soft pull for you and approve you. And we also have the Blue Business Plus from American Express. This is also a business credit card with soft pull, but again, you need to have a relationship already with American Express, either at the banking level or at the credit card level, okay, or even at the travel services level. You have also another credit card. This is a Capital One Spark 2% Cash Plus. This is great for cashback rewards. But again, the whole thing here is that for some of these cards, you may not have the soft pull button available on the website. You need to have an existing relationship with them for them to actually consider you for a soft pull credit card application. Credit card application, okay? And the other one I want to share with you is Brex. Brex is great for startups. Here is another card that is similar to RAMP in the sense that they don't care about your credit. They care about the liquidity in the business. They care about, if you are a startup, they care more about the financial performance of the company. So either they will do a soft pull or they will do no pull at all. So those are the 5 cards I want you to think about. You need to identify the best business credit cards for soft pull. We actually have an upcoming show that will cover the top 10 business credit cards with soft pull, and please look out for that. We'll give more information in that video. The second thing you need to understand is you need to check eligibility requirements. So if your goal is to look for a business credit cards that has soft pull and you want to get a high limit business credit card, you want to understand the requirements of business credit cards in general, okay? Here are the requirements. You need to have an EIN. So an employer identification number. This is important. In other words, you're trying to separate the business's affairs from your personal affairs, okay? Obviously, the business has to have a legal name. You need to also think about the industry you're in, because certain industries do not qualify for business credit cards and loans in general. So make sure that you're not in a prohibited industry, quote unquote prohibited, okay? And you also need to think about the business entity or legal structure. So you have to now. I'm not saying that to get a business credit card, you need to be an LLC, LLP, S Corp, or C Corp. But if you are a sole proprietorship, you are limiting by default the credit limits that you can get because you have not divorced your personal affairs from your business's affairs, okay? So it's important to shy away from the sole proprietorship type of legal structure if you're really serious about getting a high limit credit card. business credit card. You also need, in some cases, the requirements might apply to the time that you have been in business. Some business credit cards with soft pull want you in business. They want you to be in business for 6 months or 1 year, in some cases, or even 18 months. So it's important to understand that criterion and make sure you comply with it. Okay, and some want you to have they want to pay attention to the number of employees, because if they have to issue credit cards to each employee, there might be cost or no cost. It really depends. You also need to provide, in some cases, your annual business revenue, and they might have limits or minimums for the amount of money you need to be making on a monthly basis. It could be $10,000 or $5,000 gross revenue on a monthly basis, and they might want you to give them your monthly spend, your estimated monthly spend, because it's important to understand that the credit card limit that you get is tied to not only your financial statements, but also your monthly spend. Obviously, Chase is not going to give you a $25,000 or $50,000 credit card limit if your estimated monthly spend is only $5,000, right? It doesn't make sense to them. So those are things you need to pay attention to. And also, in some cases, your personal credit history might be a factor. Again, even though what matters really here is the performance of the business, they might do a soft pull on your personal credit just to make sure that you are, quote unquote, not a huge risk. The third thing you want to pay attention to is your FICO. Okay, it's very important. So first thing, you want to identify the business credit card that has soft pull. Number two, you want to understand their requirements. Number three, you need to pay attention to your own FICO, because we are talking about soft pull, right? This is important. Hello, right? Okay, so even if this is a soft pull and not a hard pull, you still need to make sure that your FICO is accurate. So you want to go to a website called annualcreditreport.com. This happens once a year, where you can just have an overview of what's going on in all the three credit bureaus in terms of your FICO scores and credit history. So you go to so the bottom line is you look at TransUnion, Equifax, and Experian. If there is a problem, if there is a derogatory item, if there is anything that doesn't look right, you can fix it. Okay, you can contact the data furnisher. In other words, you can contact the business lender, the business credit card issuer, or whatever is in there. It could be at the personal level or the business level that was reported to your personal credit. It's important to fix it. Okay, so you can do annualcreditreport.com is available once a year, but you can actually sign up for free credit report providers, credit score providers such as Wallet Hub, Credit Karma, NerdWallet, and CreditWise. Okay, and one thing I want to say here is that you want to challenge systematically any adverse item. Do not wait for the item to actually be on your report and you really have problems down the road. No, you want to fix it before even, because the thing is that a soft pull, when you have credit card issuers doing soft pull, they rely primarily on data from the credit bureau. And you want to make sure that data, even if this is not a hard pull, this is not a complete in-depth pull, that data is still accurate. Okay, and don't risk hard pulls at least 30 to 60 days before you seek a pre-approval business credit card. In other words, if you're looking for a soft pull business credit card to come to you, don't apply too much. Do not apply too much for other credit cards. You really want to have a clean slate, quote unquote, cleaner slate before the 1 or 2 months. And please be proactive with business credit also. We're speaking here about FICO, which is personal credit, but also trying to provide data to Dun & Bradstreet. Do the same thing with Experian and Equifax, on the business credit side. It's important. You want to build business credit in the meantime. Think about your net 30 vendor interaction and other trade lines that you might add to your business credit report. The fourth thing you need to do is to trigger. It's important to understand that if you're looking for a business credit card with soft pull, sometimes they don't happen automatically. In other words, the credit card issuer is not contacting you automatically to actually propose to you a soft pull business credit card. So you might have to actually call them. You might have to contact them So this is where you might have to solicit, quote unquote. You want to ask your current institution if there is a pre-approval offer you might qualify for. And this is not a conversation you can just have over the phone with no proof. Okay, you basically want to justify the request. For example, you can say you can go to the branch, or you can be on the phone, but still provide documentation that basically substantiates or that justifies your request. For example, have you had sales on the rise? Talk to me about that. Is your business doing better this year compared to last year? Let's have a conversation about that. Okay, and have you had increased revenue in the last 12 months? What about income? Is your income up? So when you look at quarter over quarter or year over year, or numbers in the green, or numbers positive, do you have a major purchase coming that you want to charge on the card? In other words, some cards might give you a 18 months or 21 months 0% intro APR. So it's important to sort of contextualize, and that's the word I was looking for, to contextualize the request so that the credit card issuer really see that there is a need for the credit card, and they will actually do a soft pull. The thing is, if you are able to provide documentation that shows that your business is profitable, they don't need to check your credit, because then the whole application becomes EIN only, because they're just paying attention to the solidity of your balance sheet to approve you. Make sure, if you are planning a major purchase, make sure that you show a purchase plan or an estimated spending plan where you really explain clearly what's going on or what's about to happen in your business. Make sure the upcoming purchase matches the card's reward scheme, for example. If we're talking about points, cashback, miles, this is important. So the bottom line here, and the goal is to avoid a hard pull at all costs. Okay, and the best way to avoid a hard pull at all costs is to basically provide the documentation needed to the credit card issuer, and again, contact the credit card issuer unsolicited. Sometimes if you just ask, and you ask the right way, you might get approved without a hard pull. The fifth thing you need to pay attention to is to make sure your company is financially healthy. All right, so we're talking about finances. It's important. So if you want to get approved, if you want to get a high limit credit card, business credit card with the soft pull, and you are trying to make sure that you just wait. See, the thing is, you can do this passively, where you just wait and they contact you with a soft pull offer, a pre-approval offer, or you can do things actively, where you contact the credit card issuer and give them all the documentation. What I just said a few minutes ago, you give them all the documentation they need to make the decision. So if you want to have a financially healthy company, and this should be your goal anyway, right? This is really, really important. You want to analyze your balance sheet constantly. Okay, so when we talk about balance sheet, we are speaking about a financial statement that shows your company's liabilities, assets, and owner's equity, right? So this is if we go back to the basic accounting equation, you have asset equal liabilities plus owner's equity. This is important. So you want to pay attention to your debt level. This is important, okay? And then you want to analyze your income statements. Again, you have to do these things on a monthly basis, at least monthly basis, where you do month over month comparison. You analyze the current months, all that kind of stuff. It's important to dig deeper into the numbers. Now, you don't have to have a PhD in accounting to really understand that. You just kind of look at the bottom line, okay? If you don't have the expertise to understand the numbers, you might want to refer to your accountant if you have one in-house, or you might have to refer to someone that you hire maybe to do your taxes on a quarterly basis or annual basis. But bottom line is, you need to understand your numbers, okay? You want to pay attention to your cash flow statement. So when we talk about your finances, there are three statements that really are important. We are talking about your balance sheet, we are talking about your income statement, and we are talking about your cash flow statements. So when we talk about cash flow statements, we are referring to the liquidity situation of your company. We are talking about the company's sources of cash. Okay, we want to pay attention to the free cash flow the company generates to further invest in assets or operation, whether overall cash has increased or decreased. So when you look at a cash flow statement, you basically have three sections. We have operating cash flows from. So we have cash flows from operations or operating activities. we have cash flows from financing activities, and we have cash flows from investing activities. So this trifecta will tell the credit card issuer, the business credit card issuer, that your company overall is doing fantastic. So pay attention to those things. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Study Kiwi Show. In today's conversation, we are still grappling with one issue. This is a business credit card soft pull with soft pull. How to get a high limit card quickly and easily, come rain or shine. And you want to pay attention, and this is number 6. You want to pay attention to the ratios. You want to analyze your ratios. Again, I'm not saying you need to have an in-depth understanding of ratios here, but it's important to know what's going on in your company, the financial health of your company by looking at the ratios. Is your balance sheet languid, lethargic, or vibrant? Okay, so we want to pay attention to DTI. What is your DTI on your current card? Or what is your debt to income ratio in general? Okay, so we are looking at how much your business allocates to debt servicing compared to the revenue it produces. This is important to have this sort of comparative analysis to see if your business has too much debt or not a lot of debts. You also want to pay attention to your credit utilization ratio, because if you're trying to get a business credit card with soft pull and a high limit at that, you want to pay attention to your current credit utilization ratio. When we talk about credit utilization ratio, we are talking about revolving lines of credits, aka credit cards and lines of credits. Okay, so those are really important. And then you have the actual financial ratios that credit card issuers and lenders pay attention to when it comes to analyzing a business credit card application. So in general, just remember that financial ratios help you make sense of the numbers presented in financial statements, and they are very powerful tools for determining the overall financial health of your company. Okay, so ratios fall under a variety of categories, including profitability, liquidity, solvency, efficiency, and valuation. And I'm just going to talk about a few of them here that are important for us. And so you really need to know a lot more about your gross profit margin, your net profit margin, your coverage ratio, your current ratio, your quick ratio, your debt to equity ratio. Okay, debt to equity is kind of important because this is the percentage of debt versus equity that your company uses to finance itself, and lenders and credit card issuers pay a lot of attention to that. And you also want to pay attention to your inventory turnover. Okay, how many times per period the entire inventory was sold. Also, you want to pay attention to total asset turnover, your return on equity, and your return on assets. So those are important. So the thing here is that financial ratios, you want to compare financial ratios across periods, so quarter over quarter, month over month, year over year, and you also want to compare that against competitors to see whether your company is improving or declining and how it's faring against direct and indirect competitors in the industry. This is really important. The last step you need to pay attention to here is to basically seize any opportunity to actually make your case with a credit card issuer. So if you are trying to get a high limit credit card, business credit card with soft pull, again, soft pull here means that you can either be passive, waiting for the company to contact you, the credit card issuer to contact you, or be active. In other words, you are actually you're soliciting the card itself without a hard pull. See, that's the bottom line here. The bottom line is to do everything but avoid a hard pull, right? So, for example, have you had positive media coverage in your sector lately? Are you in the news? Is your sector in the news? Because you can seize on that opportunity to actually contact Chase, or like I'm talking really be in the news big time, right? You are being reported on CNN, Fox, on CBS, on NBC, or whatever your favorite media is. You really, if your sector, not necessarily your company, but if your sector is in the news, then seize on that opportunity to ask. Okay, if your company itself has been also the subject of positive media attention, please seize that opportunity, right? This is something you can definitely do. Okay, do you have positive performance internally? Are your numbers up? Is everything up? Is everything rosy? If it is, you want to seize that opportunity. What about, have you had some competitor demises? Like, is your closest competitor currently struggling? So when you compare your closest competitor versus yourself, are things better on your side? So those are conversations that you can have, and you can turn things around. You can turn things around in your favor. Okay, and if growth in the sector has been reported by a reputable media, you can seize on that. Yeah, honestly, basically, some people will say, well, this is not advice for to get a business credit card. But guess what? Big companies do it all the time. Startups that are successful do it all the time. We have accompanied several clients successfully getting, and they're able to get business credit cards with Southpool by using the strategies that I'm teaching you here. So, and also if you have had new cash infusion, let's say you have received cash from investors or from current owners. Anytime you have a positive development in the company, either internally or externally, you can seize on that opportunity to make a case to the credit card issuer and say, listen, we are doing better. We are doing fantastic. And you should actually give us this business credit card and give us a high limit at that. Thank you so much for your attention, folks. I really appreciate it. In today's conversation, I was talking to you about business credit cards with Southpool. How do you get a high limit credit card with no matter what? Okay. First, you need to identify the business credit cards with Southpool, understand the requirements, understand the FICO, know your FICO, and you need to have some trigger elements here. You want to pay attention to your finances, to your company's finances, pay attention to ratios, and if there is any opportunity of positive media attention, seize it to ask for the business credit cards that you need. Thank you so much for your attention. I'll speak to you another time. Until then, remember, stay marvelous.